Good afternoon, fellow Cashflow builders. Thank you for joining me on this live on Facebook for Cashflow in the Know. Wow, don't mind the noise in the background. I'm in the office and there are a group of very excited people. I'm not sure what's going on, but I'm very excited to have you here. And let's talk about, some of the charts about the market so that we can find out, what investors are swinging towards, what their sentiments are, because these are conversations that I have with myself, every week, almost every day, right? To understand whether I should stay in or stay out of the market, especially about the market for the past few months. Very interesting movements. This is not financial advice. So, this is just to get an understanding about how investors are feeling about uh, you know their investments and possibly where they might be going to next. um, and again, welcome to this live session. And if you after listening to me and you feel that there are some things that you can also share with me, please come reach out to me directly to share with me what you know. So before uh, don't mind me pausing because sometimes my colleagues just walk past a bit shy. So yes. Oh, wrong camera. Oops, wrong camera. This camera. Okay. So don't mind me looking at my monitor because wait, give me just 1 minute so that I can adjust my settings. Perfect. Yes. Yes. Okay. So let's look at the charts. Pretty red day. Okay, so what's been happening, right? Like in over the past week, last week, we saw some rallies. We saw the volatility index falling, and lots of green in the later part of the week. So yesterday it's a little bit red. The question now is, will the rally continue? And yesterday we see that energy, healthcare, and consumer staples did well, utilities as well, while the rest went red. The S&P 500 also going red, Nasdaq going red. New York Stock Exchange is good. And yet the volatility index went down, right? Continued going down actually. So let's look deeper into the volatility index and see what we see. So as we can see, for the volatility index since 10th of May, it's been plunging, and of course, ideally, it's that what's ideal is volatility index falling below 20 because that's when we can really see a solid rally to the market, but it's still staying way above that. And despite further plunges in the volatility index, we see that some of the securities have fallen yesterday. So, and usually volatility index, when it's falling, it's an indication that there's fewer put options in the market, and investors use put options because they are not confident that the market will continue to rise. And in fact, they are fearful that the market will drop. So they use put options to insure their investments against a plunge. But from what the volatility index is showing, there's a reduction in the volume of put options. So it could indicate a growing confidence in the market in securities. So, but at the same time, we want to confirm, right? Like, put options, the volume of put options falling, does it mean call options? Meaning call options used by investors indicating that they are confident, like further reinforcing that there's a growing confidence to the market. So let's take a look. So yes, wait. So how do we find out about the volume of call options going up or not? Is by looking at the call put ratio. So when we see a red line, it's an indication that it could be the put options. That means there's more call options in the market than put options. So seeing a red line here further reinforces that there could also be an increase to the volume of call options in the market, indicating further increase in confidence in the market. So let's look at two parts of the market, the US triple Q. Actually, before we go there, right, let's look at the 10-year Treasury yield to see how, interest rates are being increased. I mean, that's one of the major concerns for investors during this period of time, right? Like how interest rates will be increased. So looks like there's a slight drop in the yield, which could be also a contributor to the confidence in the market that we are seeing at the moment. And also, looking at new highs, new lows in the market, overall, in the broad of it, there's still more new lows so far. So, which is an indication of a weak market. So, if you're investing and you want to, you're feeling confident, try not to go all in yet. Use dollar cost average. Looking at S&P 500, what I want to look at is the volume of, or the ratio of bull to bear investors. So it's the volume of bullish investors is half of bearish investors, which indicates still a very strong sentiment to a very indication to very strong bearish sentiments at the moment. So looking at triple Q, which is the US large cap and technology stocks, right? So, even though, its latest high is still not a new high. It's still low. It's still trending downwards. So, has it bottomed out yet? Who it's very hard to tell at the moment. If, despite having stronger confidence in the market, investors are probably comfortable about the recent federal government's meeting, the Fed meeting, right? Talking about the increase to the interest rate of 50 basis points, which is like half a percentage to increase to interest rates. So looks like investors are getting comfortable, but will there be a shift in sentiment towards further bearishness, right? Maybe. So dollar cost average. I really hope you have cash at the moment. I really hope that you had raised some cash over the past couple of months. And let's look at China. Right. So China has again this W action that went on. It's almost like a repeat of what happened back in April, when the Chinese government, right? Oh no, wait. The Chinese government announcement happened in March, not in April. But yeah, there's actually, the confidence in the Chinese market has been consistent, right? There's no lower low in May compared to April, right? The lowest low in May is still higher than back in April. So yeah, the confidence, investors' confidence in the Chinese market is actually possibly growing. So once more, dollar cost average. Let's look at Asia. So Asia is still trending downwards, right? So altogether, it looks like a since we're in Singapore, right? Like the Great Singapore Sale, the Great Singapore Sale. So, I hope that you have enough cash to continue dollar cost averaging uh, while the market possibly goes further down. And what we are looking at here is that less than 20% of the market on the New York Stock Exchange is able to maintain its stock above its 50-day moving average. It actually went below, all the way down to, went down close to 10% of companies. So, yeah, so what these charts are showing me at the moment is it's still better to remain dollar cost averaging, and yeah, and at the same time continue to raise cash. So one thing that's very interesting at this point in time is the Finra's margin statistics, which is the measurement of the amount of borrowed money um, used to purchase stocks, used to invest into the stock market. And again, now that the April results have shown that there's a reduction. So, there's a steady decline in the amount of borrowed money investing in stock market, investing in stock market. And um, it's possible that investors are selling off their stocks to pay off their margin. So, um, with this momentum, I mean, it's been reducing since October last year. So, and it's still sustained, right? Like for 7 months, it's been reducing every month. Except, of course, in January and February, there was a maintained, that level was maintained. Um, so this momentum of selling off to pay off margin can be concerning. It's of course contributed by the increase in interest rates for borrowing as well. So yeah, take all this into account. I will be dollar cost averaging still, at the same time still raising cash because I want to take advantage of the discounts that come with the sell-offs. So once again, thank you all for joining me on this live today. And you know, if you have anything else that you're using to uh, help you as you analyze and you make decisions that I've not covered yet, please come forward, speak to me. I'd love to have a conversation with you. Because I can't expect myself to know everything there is to know, right, about the market. So thank you all once more, and I'll see you in the next session. Take care. Bye.